Good evening, guys. Hope you're good. As promised, a video every Sunday for you, giving my weekly update on where I think the market is, how Bitcoin's looking, and just my opinions on how things are. Right now, price looks like it's breaking down, and to the untrained eye, this looks very bearish, but I'm going to break it down to you using the liquidity charts. If you haven't seen my channel before, I tend to use the liquidity charts when things get choppy in price, and it works really well for just defining what levels we think is going to hit next, and just where we think price is going to go. Now, if you haven't seen these charts before, this is basically liquidity. Now, these areas are, it's basically stop losses and liquidation levels for people opening up 50x leverage, 25x leverage, 10x leverage. There's a price that each one of those trades will have that liquidates, and the exchange will take all their money. And what you find is these levels tend to all congregate around the same area. And then what happens is the market will chase these down, because basically the exchange, if these guys get liquidated, if this price hits here, the guys will get liquidated and all that money goes to exchange. So it's incredible how price will follow. As you can see here, price was coming down to this liquidity level, to this liquidity level. It came up, it took this liquidity, and it's came down and it's taken this liquidity. Now, right now, it looks like brilliant. It's all going up. But if we go on the monthly, and now that'll just spin up a little bit, it shows us a little bit more information. Now, the brighter the colour is, the more dollar value is. So you can see from blue, 0. Bright yellow, it's 231 million. And it's always important when moving through time frames just to use this as a reference. And guys who used to watch these charts when I was doing them in the last choppy area, you'd normally see them like this. But what I found is using the blue just highlights a few extra ones that are kind of a little bit hidden. So what have we got here? We've got price coming down. And you can see, guys, there was a load of liquidity here. 231 million for that price alone. And you can see price has just come up and it's come right down into it. So this is good news for us. This is why price is currently moving down. But you don't know this just by looking at this bear chart. You just will not know that at all. Now, I can turn on my liquidity. Yeah, so you can see there I've got two lines here I've marked out as my liquidity here, and I've done them a while ago, but I just use them as a reference just so I can check everything in the one chart, and you can see prices coming right into that. So this is what we want, guys. When I was looking at this earlier, I had a bit of concern because I was like, if price just runs right up here and takes the liquidity at the top and then comes right down. So if it doesn't take this liquidity, price would have chased up here and taken this, and then maybe gone up here, but it would eventually have to come back down and take this. It's like a magnet. The market will always take the liquidity. So one of my concerns was if price comes down and does not take this liquidity and shoots all the way up, that's just going to shoot all the way up and then dump down and come and get it. But this is the good scenario because it's taken this liquidity now. So that leaves us just for the liquidity above price. So this is very good news. As you can see here, as it takes down, all these longs, this is just the red area here, all the longs here, basically 2 billion. And if you look at the shorts, we're up to 9 billion here in the 3-month chart of shorts. So you've got to think, will the market take 2 billion or will the market go for 9 billion? The market will always chase the maximum amount. It normally goes the least resistance for the max amount. And this is max pain for everyone because everyone's short right now. So when everyone's short, everyone has the liquidation levels, the stop loss, and then the market will reverse it and take everyone's money. This is the game we play. But a lot of people will just use this chart, which is amazing. You know, I do a lot of technical analysis on the charts as well, but the liquidity levels as well are very important, and it adds a huge another level. It's essentially saying, you know, we're looking at the car, and this is what's under the bonnet here. This is how price is moving. So I hope that explains it a little bit more. If you need to have any questions, please just put them in the comments and all that. The subscribers and the followers, they know these charts already. They would have heard me go through them over a million times when we were going through the last choppy range, and it works really well. But if this is new to you, please just put some questions in the comments. I'll answer them. I answer every question, every comment. And then this is really good to just understand, and it gives you a bit more reassurance as well, because when you see price coming down here, you're just like, what is going on here? So whenever you have those moments in the charts when you're not quite sure what's going on, come and look at liquidity. To be honest, look at liquidity every day anyway. You cannot go wrong for it, and you can't backtest liquidity. So a lot of people backtest strategies, but you can't backtest liquidity. So it's good to get a feel for it. And as that feel develops, you know, that's just it makes money. It makes money when it comes to liquidity. So let's get back into it. So price is coming down and it's taking this liquidity. This is brilliant news. So once it takes this, now what happens sometimes is when price moves down, you know, it's going to come and take this liquidity. But if a load of fear comes in and it gets really emotional, you know, it might just flush down harder before reversing. What it usually does is take the liquidity and then moves. But on extreme scenarios, when there's a lot of fear, it'll flush down. Or when there's liquidity up here and price is moving up and everyone's so ecstatic, it runs up, it'll run past liquidity just by the pure buying pressure of it, and then it'll come back down. Just the same here, selling pressure will push it right down, but it'll come back up. So it may flick past liquidity just by if people start panicking, but normally it will just reverse here. So it's coming down, take liquidity, and then we should see it moving up, which is good news. And then this will be the first target, 98,000. There's 300 million just sitting there for the taking. And these lines on the side, you know, you can see the bigger the line, the more liquidity there is. So if you look at this little line here, it's got 86 million. But if you look at this big line, it's got 300 million. So this side par here is just a quick reference as well. You can instantly see your levels here, here, and here. And now price is taking this one right now, so this is good news for us. And then each one of these, look, 27 million, 122 million, 22 million. So it doesn't matter like price just going up and hitting these, it's taking all this money on the way. That's the main target. All this money on the way, that's the main target. And the market will never leave this here. Never leave this here. Never. It does not leave liquidity here. It will take this 100%. It just doesn't leave it in the market, because otherwise everyone that's gone short here, which is everyone, will make money. And now the market doesn't let everyone win. You know, 90% of people lose. You know, there's a reason for that. You know, there's only if 90% of people won in trading and investing, then, you know, where's the money coming from? Sorry guys, a wee bit of cup of tea there. So, another chart is very similar to this, to the last one. So you can see this one. This is more of a typical chart, but just with the liquidation levels there, you can see price. This has price on the x-axis. So, 79, 82, 86, and that's currently where price is. And this green up here And red here, that's the longs and that's the shorts. So you can see the scale there for 4 billion, 3 billion. So we can say there's 1.2 billion of longs there and 4 billion there for the 30 days. And these individual spikes are very similar to these here and these levels here. These are clusters of liquidations. And you can see in the chart here, the orange is 100x, yellow's 50x, blue's 25x. So you can see they cluster up. And these act as targets as well. So you can see prices come down, it's working straight, it's at 86. And right now we know it's just about to take this liquidity. And you can see here it's just about to take this here. And as you can see below, there's not much there. There's not much left. So this ties in with this. And what we should see is price come down, flushing hard into this, take liquidity, and we should move up. So liquidity wise, we're in a very good position. I'm very happy because this has been taken. This will now allow us to move up. The market will move price up and take everyone's money all the way up. Now, we also have the sentiment super bearish right now. You know, it's popped up there, it's come back down. Everyone's freaking out. Exactly how we want it, guys. That's exactly how we want it. And we want to take a step back. We want to take a step out and just have a wee think and have a wee look at price action. Now, we can look at price and we can look at liquidity levels, but there's also another thing we should be looking at, and that is time. A lot of people don't do this. A lot of people just look at price. They don't bother looking at different aspects of the charts. You'll see me, I'll do price action, technical analysis, I'll do liquidity, and I'll also look at time as well. And as you can see here, guys, bottom of the cycle, it comes up, gets a low, 29 weeks. Price gets up, gets a low, 32 weeks. Price gets up, gets a low, 28 weeks. Price gets up, gets a low, 35 weeks. Price gets up, gets a low, 32 weeks. Isn't that crazy, yeah? Price just, not many people, they look at the 4-year cycle maybe. They might understand a wee bit about the 4-year cycle, but there's weekly cycles and there's daily cycles as well. So guys, what happens every time we get a weekly cycle in? Price moves up 200%. Price moves up. Oh, price moves up 77%. Weekly cycle, price moves up 90%. Weekly cycle, price moves up 62%. You can see where we are now. We're now in a bottom of the weekly cycle. And if we go on the daily chart, there is also a 60-day cycle. And a 60-day cycle is very similar to the weekly. Price will move up and it'll come into a low on the 60-day, plus or minus 10%-ish. So you can see this low here was on 61 days from that low. And now we're on 65. So we're expecting a low any moment on the 60-day cycle. So as expected, price is coming down into it. And now we're taking this liquidity, which also marries up with the time coming down to take this liquidity. And normally after a 60-day cycle, we will then push up out after it. So even though price is moving down here, all it's doing is just a simple liquidity grab. It's just grabbing that money before it runs off to the upside. So even though it feels very scary now, especially when you're looking at these prices and you're seeing that bars are there, you know, we're going to be okay, I think. And it's quite often on cycle lows to break trend lines and fake out and then carry on moving as well. So it's doing everything as it would usually. And when we have the 60-day cycle in conjunction with liquidity, the liquidity grab, That's a very strong signal for prices coming down. It's taking liquidity, then we're going to move up on after it. So guys, hope you enjoyed this one today. It was a wee bit more on the liquidity side of things. I'll try and mix up most weekends and show the most relevant charts to how things are looking. And again, ask me any question in the comments on liquidity. The subscribers and the guys that have been with us, I think they should know a good grasp of it. They've definitely seen us go through it a lot. So, but even you guys, if you still need to ask more questions, then feel free, and we'll get them questions answered for you. And let us know in the comments, are you bearish or are you bullish? What are you thinking, guys? Because that normally helps me gauge sentiment as well. And you have to be honest. You have to be honest. Don't say bullish or bearish just because you think that's the right answer. Just say, well, how do you actually feel right now? And then we'll do an analysis of that as well. Nice one, guys. So, hope that's sound. I'll put another one out. I think I'm going to try and do it Sundays. I think Sundays are the best ones for us. And then I'll keep you updated on any time I sell as well. Right now, I'm still 100% in all my positions. I'm still long, still waiting for this last move up. We're going to get this final push up, and then we're going to decide when price gets close to it. You know, look up here. There's $1 billion of liquidity. For the market not to take that would be insane. That's just like, it's just leaving £1 billion there when you should go and get it. You know, the market just doesn't do it. They'll push price up, and they'll take every single liquidation level here, and they'll liquidate every single person that's short all the way up, and to take that, and then they'll decide where to go from there. And it's just like when everyone's long. When everyone's wanting price to go up, that's when you see the market coming down like here. The market comes down here, everyone's going long, and it comes down, and it takes everyone's money all the way down. Everyone gets liquidated, everyone gets stopped out. And then, on this time, everyone's lost their money, or they're all going short. And what does price do? Well, the market decides, well, we need to take all this money. And it just starts liquidating everyone all the way up here. And this is why 90% of people lose money. Is because they're on the wrong side of the trade. Even just understanding that concept of if everyone is long or if everyone is short, you need to be doing the opposite, because if 90% of the market is losing money, 90% of the market is wrongly positioned. So when you look at charts like the liquidation levels, and you can see everyone's short and 90% of the market lose money, you then need to look at longs. It doesn't mean you go instantly long. It means you look at longs, and then you look at price action on, when to enter. So you can see everyone is short, when to enter, and what have we got? We've got a 60-day cycle, 60-day cycle low, a break, a trend, a push up, a retest, a liquidity grab into a 60-day cycle, and now you get a break. Say of this trend line here, and then you can open up. When it breaks at this trend line, open up, stick it under the pivot low, say it goes like this, put it under there, breaks up, starts moving up, and then you can just long that up. Not financial advice, don't ever listen to a man on a computer. But yeah, that's how it usually goes. So hope you had a good weekend, guys. Like and subscribe. Please hit all notifications if you're genuinely interested in finding out what videos are coming out. And the only time I'll update is if I'm changing something to the portfolio, or I'm entering a different position or selling or anything like that. I will put a video out instantly to tell you that's done. So make sure all the notifications are on the subscription part of the channel, because if I push out a video and say the algorithm doesn't push it to you, and then you notice 3 days later I've sold, then unfortunately that's just the way the algorithm works. Okay, for the last time, I'll see you later. Cheers, bye.